Welcome everyone to Redefine Tomorrow 2025. My name is Michael Bridey, and I am a foreign exchange economics and crypto market specialist here at Bloomberg. And I'm really happy to be joined today by Jonathan Levin, CEO and co-founder of Chainalysis, for this fireside chat, talking about on-chain compliance. Thanks, Jonathan. How are you today?
Doing great, Michael. Great to be here.
My first experience with Chainalysis was on Tracers in the Dark a few years ago. Definitely learned a lot from that book. Got into the weeds, but it's just quite amazing what the company has done. I know you recently transitioned to CEO in December of last year, after co-founding Chainalysis well over a decade ago. But let me ask you, how has this on-chain compliance landscape evolved since those early days when you were responding to things like the Mt. Gox hack? And what does this tell us about where this industry is heading today?
Yeah, I think that when you look back over the last decade, really in sort of cryptocurrencies, so much has happened. Everything from all of the different use cases that people actually use cryptocurrency for today has changed, and all the different blockchains that now exist, all the different payment options that now exist, stable coins now exist. So like the whole landscape has changed, and so has the entire world of compliance. And ultimately, compliance is all about putting controls in place around what are the use cases, what are the risks that are involved in cryptocurrencies. And so I think Chainalysis, we've kept up with all of the different developments over time, and the different types of risks have changed so much. So when we started Chainalysis in 2014, the main thing that people were worried about at the time was really, darknet markets. And
Sure.
darknet markets at the time were these underground marketplaces where you can buy and sell, contraband and drugs and things like that online. And really, that was sort of the main vector of crime that was involved. And when you look at sort of what's happened with cryptocurrencies, is that it's actually now intertwined with all of the ways that people transact in the world. It's part of remittance corridors, and it's part of
Sure.
business to business payments, and and so the compliance needs of all of our customers have become a lot more sophisticated. And the types of enterprises that Chainalysis works with today are not just early stage crypto exchanges, but actually some of the largest banks in the world, some of the largest fintechs in the world, across all of the different business lines that now involve, blockchains in some way. And so, we've had to really adapt to,
Sure.
that and adapt with the times.
Plus globally. I mean, it goes without saying, we probably should just address this right out of the gate because I know your firm works in many different countries and jurisdictions. But with the new U.S. administration, establishing this working group for digital asset markets and the SEC creating its own crypto task force, how is Chainalysis adapting its priorities, to strategize and navigate this shifting regulatory environment, which seems to be changing all the time?
Yeah, we're moving quickly across all of the different geographies that we serve. I mean, one of the things that people who run businesses like myself think about is like how many different countries do you have people in?
Right.
So we have people on the ground in 32 countries around the world that actually serve local markets with local domain expertise about what does the regulatory environment look like? What are the particular national security threats that people are dealing with? And what are the national priorities that are present that is worth us tackling? So this is where I think Chainalysis has done a really good job of actually being able to be on the ground helping our customers, whether those are on the public sector side or on the private sector side of our business, and that helps us stay um, you know, that helps us, really make sure that we've got tailored solutions to, our clients in those different geographies. So and I would say, today what we're seeing is that the U.S. administration is setting a very aggressive agenda. It's having a big impact on markets. It's having big impact on Circle's IPO last week, and that's really something that is exciting that the US is back open for business. Meanwhile, we've seen sort of growth in all of our different international domains as well. So this is something that we are very focused on serving local markets with local talent, with local like nuanced understanding of the domain. And that helps us, serve our clients a lot better.
Yeah, so to build upon that a little bit, you mentioned that you have customers in many different countries, and not even sure how you guys do it with so much diverse global regulatory approaches. But right now, from your perspective, which jurisdictions do you see setting the best example for like balancing this new innovation and consumer protection?
What we've seen is that, there have been a few different approaches happen across the globe. And, you know, I think Europe was definitely behind at a certain stage, but now with Mika coming in Europe, you've got a single market where at least the rules are very clear. Now, you've got problems with that regime too, where it comes down to, particularly in stablecoins about, how do you think about having USD denominated stablecoins in a European market, and how does that really work? And there's things around DeFi that are not nailed down in that piece of legislation. But I think when you think about having some clear rules of the road, you've got to say that Europe has caught up with some of the other jurisdictions around the world. So that's definitely a positive step in terms of being able to make sure that everyone in this 500 million person economic region is able to actually interact with the technology. The thing that's lagging in Europe today is actually giving licenses to businesses around but in each geography. And so you've got quite a bit of discrepancy between, France and Germany and Austria and other places where you've got some markets that are moving faster than others, but at least the rules of the road are clear. We've also seen, the Gulf be a particularly, attractive point for people to get involved, and you've got ADGM and VARA setting a really, high pace of, standards and actually, licenses and innovative takes on actually how to do regulatory oversight in those geographies. And so I think that's, a space to watch, and it's been exciting to see those regulators actually come up with very innovative frameworks for how to actually oversee this market. We've also got Singapore and Japan, and I could go on, but the interesting thing is that actually you've got some cohesion happening on the type of activity that regulators want to attract in their geography. There's some level of coordination and cohesion on the expectations on licensees. And really, I think that's going to continue to increase as you get more and more guidance out of these different countries.
Yeah, it seems like the use case for this technology is changing pretty rapidly. We opened up talking about tracers in the dark and illicit activity, but I read recently, and correct me if I'm wrong, that less than 0.5% of cryptocurrency transaction volume is illicit activity. But it seems like in some cases there's a different perception. So as TradFi gets more involved in this space, how do we adjust this disconnect when working with traditional finance, who are finally now considering crypto adoption?
I think that there's a couple of things that are changing in the perception that I think is important. Number one, the absolute number in terms of illicit activity is still on the rise, and so I think that that's something that people look at, and that fuels some of the perception. But people need to understand that this is now like a much bigger and much more useful set of payment rails than have ever existed inside the cryptocurrency ecosystem. And so the percentage take is an important thing to look at, as well as the absolute numbers. So that's like the first sort of piece of it. The second piece of it is that I think that as cryptocurrency gets more and more integrated into traditional payment rails and traditional financial institutions, that that perception is really, something that is being felt by those people in particular,
Right.
because some of the fastest growing parts of the criminal ecosystem have direct impacts on those communities. And I think that this is a really important point that both the financial system in general needs to think about, but also the cryptocurrency players themselves, is that really, as cryptocurrencies get more and more intertwined with traditional finance, there is the impact of abuse actually crosses the
Yep.
boundary between those two worlds. And so this is something that we observed is like the fastest growing aspects of cryptocurrency related crime have been scams and theft. And the reason why that's super important is that actually this impacts the wallets of consumers around the world, and not not just people who have cryptocurrency wallets, but also those who are getting scammed in traditional financial instruments when money is
Yeah.
being laundered into crypto. And so the fastest growing fraud vector out there today is authorized push payment fraud. And authorized push payment fraud is not a crypto phenomenon. It's actually, what some people call the scamdemic. It's actually, scammers online
It's incredible.
tricking, tricking consumers into,
They're good.
paying
They're
for
really
good.
good. They're really good
Yeah,
at it.
it's really believable. I mean, it's getting worse. It's this thing where if you've now received, a phishing campaign, or you've received a phone call, or one of your loved ones has received a phone call, really, really good impersonation. I mean, once they have, biographical data about you or your loved one or a child, and you get contacted about them with those details, it's led to really successful campaigns of scams. I mean, not just that, though. I mean, we see a huge proliferation on scams in terms of tickets, in terms of, goods being sold online. And really, the hard thing for all financial institutions today is you cannot detect authorized push payment fraud effectively by evaluating your customer who has fallen victim for one of these things. Because, Michael, if you are a victim of this scam, you authenticate into your bank account or into your cryptocurrency wallet as Michael, and then go through the same payment steps with your full intention of making a legitimate payment.
Yep.
It's so difficult for a financial institution to help prevent you falling victim for that. And that's what we realized at Chainalysis, is that instead of just being the people that report the news on, how much, scam activity happened last year, actually we needed to help equip financial institutions with the tools that they need to actually prevent some of this activity from happening. And so, we purchased a company called Alterya, and what we've been doing is actually going out, meeting scammers across the internet, whether it's on scam websites that they run themselves, whether it's social media, and really at scale, talking to scammers and getting all of the infrastructure that they are running on, whether those are bank accounts, cryptocurrency addresses, emails, phone numbers, and building like the largest entity graph of scammers online, and giving that information to banks, fintechs, and cryptocurrency businesses to help curb the growth of this, because it's only getting worse with AI, and the scammers are leveraging the best technology, and we have to do the same too.
Yeah, it seems like it is it is a little scary out there. And it also feels like there's a big education gap. And I think your firm is really trying to fill that in a little bit too, because whether it's TradFi or retail, it seems like there's an education gap on like what to look out for. And I do want to talk about Terria for a second, but staying on this compliance idea, Obviously we just went through a bunch of scenarios how dramatically this landscape of technology has evolved since, I don't know, probably 2017. So can you walk us through a little bit how the analytic capabilities have advanced since then, particularly in times of, I always hear cross chain hacking analysis, and how you guys have been able to do that.
Yeah, I think that one of the things that we have seen in sort of our evolution as a business is that there needs to be a real focus on quality first. There is definitely, you know, AI is a great technology, and I think it's going to produce a lot of really good and interesting automation and you know workflow improvement. But one thing it doesn't do a very good job of is actually label blockchain transactions with evidence that you can hold up in court. And
Hmm.
one of the things that we have spent our time doing at Chainalysis is making sure that we have a very deterministic approach to labeling transactions that we believe are associated with particular wallets. Like this has been our approach from the beginning. We've said, yeah, there is room for a lot of you know machine learning and AI for a lot of workflow improvement. But when it comes to your core data set, when it comes to the data that you make a decision on, you know, programmatically, or even the thing that you feed into one of those models, you need to be very sure about the method that created that label in order for you to be able to scale it with the type of machine learning models or AI models that you're running on top of it. And so, this is something that we've done for 10 years at Chainalysis, is really made sure that we have that as the base level of the way that we build our products. And then it's about, finding ways to think about cross-chain transactions, or, being able to develop what we call signals, which are probabilistic labels that we're applying to, for example, personal wallets or different types of illicit activity. And really, our approach has been that in these circumstances, we then allow users today in Chainalysis products to look at multiple different blockchains on the same graph, multiple different currencies. We allow for these things to be collapsed and reimagine really what a multi-chain universe looks like. And I think that for people that are less familiar, there are lots of different reasons why people use different blockchains. And some of
Right.
that is speed, some of that is convenience. And we have found that we need to meet our customers where they are, where they're adopting, these different currencies in those domains, and give them the tools that
Yeah.
interpret a specific transaction, or give them a US dollar version of the graph, because it needs to be put in context for people. And so really the goal of Chainalysis in this new domain has been, you know, ensure that the base level of the data that we collect and label in our products is as reliable as ever before, despite moving to 20 different blockchains. And secondly, where we are actually providing insights and labels, make it very clear where we're using probabilities and where we're using, you know, a machine learning model or AI. And I think that this is really the best practice that, you know, we help set the standard for. And then, people are then able to complete their work a lot faster using those insights as things get a lot more complicated in, the blockchain ecosystem.
Yeah, Chainalysis has done an amazing job of keeping up with the speed of the way things are changing, for sure. You had mentioned Alterya earlier. I know Chainalysis has made some strategic acquisitions recently: Hexagate for smart contract security, and Alterya for AI-powered fraud detection, which you previously mentioned. And this represents a little bit of a shift. You're being more from kind of reactive analysis to proactive prevention, and I think that's what TradFi is looking for. But what really drove that strategic pivot?
Yeah, I think we were talking about it earlier, is that like the two fastest, crime types that were emerging for us on the blockchain were, you know, hacks and scams.
You're right.
And when I look at that and I look at it and I read our report every year about, the trends in crypto-related crime, I get very depressed when we don't do something about it. And I saw an opportunity and I knew these founding teams and I said, well, if they were actually inside Chainalysis, could we actually make a dent on preventing this number from actually increasing? Could we get to be part of the proactive solution to preventing more victims from scams of losing their life savings
Yeah.
online to some scammer? And could we prevent the next Bybit hack through providing tools to exchanges about how they sign transactions and the movement of funds between their wallets? And really, Hexagate and Alterya are now within the Chainalysis product portfolio. And, it's not just about, ensuring that organizations are compliant, but actually, we are showing our partners and customers that it's possible for Chainalysis to be used to actually prevent bad activity from happening on your platform, that it can keep you safe from, all types of vulnerabilities that are targeted at your customers or your enterprise. And I think that this is like really a big shift in our DNA that is, we needed to move to preventing this harm from happening. And so that's what we've been focused on delivering on this year.
So you mentioned AI quite a few times there, and clearly there's going to always be a growing threat from nation state actors like North Korea with all these AI driven scams. I mean, we must have used the word between us scams a dozen times already. And whenever you have new technology that's used for good, it's always going to be used for bad. So how is this artificial intelligence both escalating? Well, we know how it's escalating crypto fraud, but are you guys using it? How is it helping strengthen your defense tools?
Yeah, I mean, just to put a point on it, I think that we're starting to see AI used in many different ways, whether that is, for, analyzing code bases, to find vulnerabilities, if you're an attacker, and using AI if you're a defender, where you're looking at, ways to look at code bases and vulnerabilities on the defensive side. And there's going to be a lot of dual use AI in that sort of way. You're seeing AI be used in compliance contexts to look for anomalies in, identity and other types of things that we start to see. And all of those things essentially are sort of double-edged, where, it's a perfect example of a dual use technology which can be used by both attackers and defenders. In our sort of specific domain, what I think is important for people to know is that, when it comes to, scams, attackers, fraudsters, scammers are using AI to, build synthetic identities, to look up information about people, to gather social engineering information, and to, write, very well articulated and, sometimes speak in a very well articulated way, in a way that is very familiar to people. And so, this is only getting worse as AI gets better. What does it mean to use AI on the defense? Well, what it means is that, we have to be scaling our defenses at the pace that attackers can scale their attacks. And so, when we used to do manual review of, websites and look at, different, sources online, whether those are, YouTube videos or, Telegram channels or what have you, we used to use a lot of manual analyst time to review those things. Now, today, we've built a suite of tools that allow us to be able to leverage AI across the different parts of our workflow. And like that actually helps us move a lot faster through those pieces of information and get humans focused very much on, what are the places that we really need human judgment? What are the places that we need, humans to make sure that we've got checks and balances on, you know, that collection. And so, this is something that we, spend a lot of time on in Chainalysis. We're doing a lot of design work on how do we think about that from an intelligence production standpoint. When it comes to actually exposing this to clients, we've just started exposing AI to our clients. So we launched a product called Rapid this year, which is about giving people a basic insight into a cryptocurrency transaction or an address. And really that's about saying, we've built the deepest investigation software for a really long time. And you know, as cryptocurrency becomes a lot more popular, giving someone just a summary of, hey, what has this address been involved in? What does this, transaction mean? Like giving that interpretation, summarizing it, putting it in plain English is something that we think has been really important. And that helps again us scale the actual response from the good guys against what is a much, much higher scaled attack surface from the attackers.
I spent a lot of time with traditional finance firms, whether it's banks, institutional investors, hedge funds. The two topics that come up all the time is tokenization of real world access, assets, and stablecoins. So as the tokenization of real world access accelerates and we start to use the blockchain more, and I heard a little bit, I don't know a lot about it, but you can fill me in. I know you have a new Sentinel product that kind of integrates with Tether's Hadron platform. How do we see stable coins and this broader tokenization trend of real world assets? Like, where is this headed in the near future?
I think that, clearly the market thinks that, we're headed to a much bigger place. I mean, if you look at, and again, I'll mention Circle's successful IPO last week and, what that looks like. I mean, valuing Circle at almost half of some of the exchange venues gives you a sense of like what the market thinks is going to be possible from a asset tokenization and stablecoin perspective. And I think that the mental model that I use and I think is useful for people is that stablecoins are maybe the first sort of RWA or real world asset
Yeah.
tokenization that's really hit off into sort of the mainstream. And so I think that if you think about the this market as being very connected, um, you find that stablecoins are sort of the gateway into real world asset tokenization. And when you look at the success of Circle and Tether and the amount of stablecoins in circulation today at sort of north of $250 billion, you can see that that is a significant level of demand to have a US dollar on a blockchain with all of the benefits from being able to custody it yourself, move it instantaneously, you know, make atomic swaps for other assets on chain. And that's really the promise of real world asset tokenization is that you can take an asset that perhaps had artificially low liquidity and change it in a way to have representation that actually increases the amount of liquidity or increases its viability or lowers the cost of compliance for a registration or what have you. And that's really the thing that I think is the promise of this is that over time things that have been artificially restricted from being able to be traded or things that have been difficult to construct contracts over become much, much easier with both the existence of stablecoins and tokenization more broadly. I think from a Chainalysis point of view, we look at this as like a major market opportunity that has now some different use cases. And again, we like to say that, on the use case around payments in stablecoins, the biggest thing that people are worried about is, fraud. And, we make sure that we lead then with our fraud products to help, combat, scammers from being able to abuse, stablecoins for that. When we think about, real world assets, it's a lot more stuff around, compliance, and there's lots of compliance obligations for all of those instruments that people want to move onto the blockchain. So we make sure that we've got the analysis that helps solve that problem too. So those are the things that I think are really important when it comes to actually you know helping institutions adopt stablecoins and real world assets tokenization.
Yeah, I think stablecoins, we're a lot closer to being using them in more meaningful ways. It's just a matter of integrating. And I've heard you say several times in some of your other interviews in the past, the term, you take traditional finance and crypto native. Essentially, they're going to get married at some point. I mean,
Yeah.
it's less of a revolution, more of an evolution. I guess I question a little bit, are the in-laws ever going to like each other? And I think that we'll figure that out down the road a little bit. But you mentioned, so how is Chainalysis helping build that trust and that compliance infrastructure, necessary for those two families to kind of get along?
Yeah, I would say like there's a couple of different ways. I mean, for the traditional institutions that are looking at stablecoins as like a really interesting market, of course, compliance is top of mind, and they have all these new questions about, okay, so I understood e-money as a sort of concept in Europe if I'm in Europe, or equivalent sort of systems around the world in terms of stored value, but all of those systems are closed loop systems.
Sure.
And so I've got these risks of merchants and I've also got these risks of consumers, but I kind of know what the universe looks like. When they step into a stablecoin flow, sometimes they've got sort of more open loop elements to it where, anyone can access, this payment rail, or any merchant can automatically accept a payment. And so like that's something that they need to sort of grapple with. And, we're building the compliance systems to be able to do that. The one thing I would say is that like, is changing that now we have moved much more into fraud is that like we're able to actually close the loop between some of the fiat transactions, some of this, traditional instrument transactions, um, and the crypto side of the fraud. And Chainalysis is very uniquely placed to actually help fraud departments across traditional finance understand both the elements of cryptocurrency related fraud and traditional payment fraud. And that's the thing that I think Chainalysis is very uniquely placed to do, that will help bridge the gap between sort of where we are today, where fraud departments are very nervous about stablecoins and the prospect of push payment systems coming in that are instantaneous and make any sort of fraud department very nervous. And then also making sure that we've got compliance systems in place for open loop systems compared to closed loop systems.
Yeah, and that gets back to education, making sure these people in compliance really understand what they're looking for and what to be aware of. So you see the world, especially when it comes to cryptos and cryptocurrency in the industry in general, through a different lens than I do, probably for the most part. So looking ahead, let's say 2 to 3 years, what do you see as the biggest opportunities? But also on the flip side, what are you worried about? Like what's keeping you and your firm up at night?
Yeah, I mean, I think that there's there's lots of opportunity. I think that what stablecoins today are demonstrating is that there is a huge amount of different use cases that they are solving today. I mean, when we look at our data, we see that there's a large amount of the volume that is being used as settlement currency between venues that is more efficient than traditional rails. There is a lot of stuff now happening in the B2B landscape. There's certain remittance corridors that are exciting. I think all of those uses in terms of real world utility of stablecoins is like a very large opportunity over the next few years. And as the US finally gets legislation around this, that's a huge catalyst to the growth in that space that I think will start to really drive up the amount of utility that we see even in developed markets for this technology. So I think that that's clearly one of the things that I think is exciting. Maybe to throw something like even a little further out, again, not necessarily in 2 to 3, it depends how optimistic on AI you are. But I think that there is a real, you know, new type of payment that will exist beyond what we think about traditional payments today. And I think that, you know, this is where we judge sort of the success of some of these new technologies. Like, if a technology is able to increase the number of transactions itself beyond just replace existing transactions on new rails, that's where you start to get sort of
Yeah.
real
Scalability,
interesting scale. Yeah, really interesting scale. And so I think
speed,
that
and
one of the
security.
things, yeah,
Yeah, speed and security. No, please continue. I agree with you
yeah.
100%.
And so like the way that you're seeing it at the moment is that even, today when you look at stablecoin payments in crypto, you've got trillions of dollars of transactions. Not all of those transactions are displacing, Visa and MasterCard. Like Visa and MasterCard are seeing transactions grow. You're not seeing transactions drop off that. So those are net new payments that are happening, in today's world, even in existing stablecoins. But what happens if you move to a world where actually, humans aren't the people who are responsible for a lot of those end payments? Like what happens when, agents are actually responsible for, making those payments? That's something that is suddenly a lot more interesting in terms of like scale and volume than what we already have today. And I think that, maybe this is more than 2 to 3 years out, but actually it makes a lot of sense to me where you've got a stable coin as a store of value, as a rail that these agents can be using, where it looks a lot like humans browsing web pages, which now, you know, will be a decreasing phenomenon in the future. Like our days of, at least my days of scrolling through like countless web pages to find what I'm looking for is kind of over. And I definitely get this feeling of like actually, you know, websites and content are increasingly being built for machines rather than human consumption. And I think that's like a really interesting area that we haven't seen yet fully exploited, but actually paves like a way for like a very exciting prospect for technology like stablecoins.
Yeah, I've gone down that AI agent rabbit hole quite a few times, and it's the future is going to be interesting. And we talked about traditional finance, we talked about crypto. Most of the TradFi firms that I speak to, they're whether it's on a massive scale or a very small scale, they're all exploring digital assets, right? So what role do you envision TradFi playing in the future of crypto, or is this going to morph into one new way of how we do business? And so, how does the compliance technology? How are you guys going to help that transition? Like, how is Chainalysis going to help that
Yeah,
transition?
yeah, I think that like the easiest analogy here is like everything that we had to do with sort of, moving online. And so, a traditional bank that had a compliance department, in the 90s, a lot of the compliance systems were around, you know, bank branches and manual checks and, um, maybe even, yeah, it's pre 9/11. So, it maybe wasn't even, that intense at that point in time. But essentially, you know, even as we went through the early 2000s, those systems and those processes were all incredibly manual, incredibly reliant on sort of looking someone in the face and judging whether they are exactly who they say they are. But then everything moved online, payments moved online, payments got faster, payments got cheaper. We had like a complete explosion of financial technology, and compliance needed to keep up with the changes in technology. And so I think that it's a very similar sort of transition where today all of the compliance systems for all of the banks are essentially adapted for onboarding users online, managing users online, apps and online payments and faster payments. And what we've traditionally been used to. And compliance teams have to adapt to that. And now they have to adapt to the reality that money is going to move on and like on the blockchain. And so having the specialist tools to be able to do that effectively are really, really important. But I think about it as like this evolution from, you know, building a digitally native compliance program into a blockchain native compliance program that we'll see in the future.
You mentioned earlier about the amount of volume going through on credit cards, how it's just continued to exponentially grow. So that's not much of a threat, but the same is kind of happening with blockchain based, value of transfer. I'm sure you guys are seeing this scale moving very, very quickly as well. Will it ever catch up to the speed and the amount of volume that we need? And with this volume increasing now, are your systems able to handle this type of volume?
Yeah, so I always say that we build our systems to be more scalable than the blockchain systems that sit underneath it. So we make sure that we're ready to handle that type of volume, and so we have been tested a little bit now with like high throughput blockchains that exist out there, whether those are the Solanas of the world or Ton of the world. And so I think that it is really important that we Chainalysis build for scale, and that's why I'm very excited about our acquisitions and our push into the domain of actually being able to yeah prevent illicit activity, not just detect it afterwards. Because as the scale of these things get really big, just detecting it afterwards becomes an even less important
Right.
problem if the scale has gone up that much. And so, I think that that's definitely something that we've been thinking about. But I do really believe that we're approaching a world where actually making transactions on the blockchain, the cost of that is falling lower and lower, and that means that we are scaling the underlying blockchains, which actually is really exciting for people who are stepping into the space, and the use cases around that are definitely exciting for people.
Yeah, so when we think about cryptos in general, they go through crazy different market cycles, and that kind of aligns with this year's Redefine Tomorrow market theme. How do you see compliance requirements evolving in these different market phases that we're going through?
I think that like one of the things that I think is important that again compliance teams around the world are going to be looking at very closely is that I think we treated crypto with one brush, and there was crypto compliance means one thing. I think that what you'll see over the next couple of years is that use cases really matter. um, the different risks that are present will be different in these different use cases, whether you're talking about payments, whether you're talking about remittances, whether you're doing investments, like all of the different like aspects of compliance will be different for those different use cases of the underlying technology. But the common theme for me at Chainalysis is that like we're here to be the data partner for all of those different use cases. And so, I think that it's really important to think through what is the risk appetite per use case, and what is the data that we can bring to bear from the blockchain itself that actually helps us solve that problem in the most meaningful way. And so, the thing that I'm really excited about is that over time, I could totally see us being able to offer a lot more bespoke solutions because of AI that we couldn't do beforehand in solving really this, risk appetite of our different clients in those different geographies for those different use cases. And so I think that that's something that gives me a lot of excitement where you know, Chainalysis continues to focus on what we do best, which is, gather the data about what happens on the blockchain. And then, really technology helps us, deliver that in a very bespoke and tailored way to each of our customers' mission as the amount of different use cases around crypto continues to explode.
So let me ask you this. So earlier we were mentioning, fraud, the amount of information that's out there from a consumer standpoint, and how AI could, use this data, for how do you balance the need for transparency, which the blockchain offers, and compliance with legitimate privacy, that's expected from users? It seems like there's like two forces working against each other there a little bit.
So I think that actually, and this is something that traditional financial institutions understand really well is that traditional financial institutions are really the custodians and trusted partners to provide financial privacy to all of their customers, but ultimately take on the obligations of ensuring there is compliance and controls in the system. There will be parts of the economy in crypto that are peer-to-peer that won't fall under that same regime, but there will be lots of people who really want financial privacy and want that financial privacy ensured by the same people that they entrust today. And so, I think that that's the opportunity again for traditional financial institutions inside the cryptocurrency ecosystem is that maybe institutional players won't want to transact on chain themselves in the open. Maybe they will want to go through one of their trusted institutions to make trades and move assets on chain. And I think that that's again an opportunity, a service that TradFi is traditional institutions are going to be offering their clients.
Jonathan, this was a great conversation. As we wrap up, what should the audience here know about any upcoming? I mean, you guys are moving so fast. I don't know how you do it, but what should the audience know about any upcoming Chainalysis developments, products, initiatives, or we're halfway through 2025 already. It seems like a flash. What else is coming that should be watching out for in 2025?
Yeah, I think one of the things that we are talking to our clients a lot about is prevention from a holistic perspective. So don't just think of us as compliance. We are helping with fraud prevention and security for the most complex cases around the world. And so that's sort of our main focus. And you'll see lots of experimentation with AI this year. And so I won't give too much away, but you've seen us launch one product, and you'll see us do a lot more around that in the coming months.
Well, I think the world is be comfortable in that knowing someone's trying to work on anything to do with breaches and fraud. Jonathan, we covered a lot today. I really want to thank you for your time and thank you for all the work Chainalysis has been doing. Really appreciate this conversation. I definitely learned a lot, and I look forward to catching up in the near future.
Thanks, Michael. Appreciate it.